This is Dylan and welcome to the daily trade analysis video. Today is Monday 22nd of June and we're going to start off with the euro against the US dollar. This is the 4-hourly chart. So let's zoom in the 1-hourly chart itself, as I would like to show you that there was actually a previously there was a head and shoulder formation. Therefore price has fallen and the formation has completed, and right now we are seeing the price is appreciating, expecting price to appreciate all the way back to the previous resistance level at the price of 1.1427. If you guys mentioned level of 161.8%, and over from there we shall look for the short opportunity. And if price were to get resisted and we are expecting price to fall all the way back to the rising trend line, as you can see right here, based on the 4-hourly chart and the 1-hourly chart itself. So that would be the opportunity to go for the shorts, and that is pretty much for the euro against US dollar. And next we have the New Zealand dollar against the US dollar. So back to the 4-hourly chart, we are seeing the price has been moving sideways as it consolidates, and it has been seen supported at the price of 0.6895. Alright, based on the formation itself in the 1-hourly chart, the chart pattern itself is actually suggesting the price may appreciate further. But however, if we go back to the 4-hourly chart, we can see that there's a falling trend channel. This is the top as it touches and it starts to fall. But right now we have yet to see the price to touch the bottom of the falling trend channel. So there is also a gap, or rather space, for the price to fall even further. So price is pretty much uncertain, but as of now, based on the movement of the candlesticks, we are actually seeing the price may appreciate further from here. So you may want to use a Fibonacci retracement to see where will the price retrace to. First level of course is at somewhere at the price of 0.6960, retracement level of 23.6%. A better level will be at the retracement level of 38.2% at the price of 0.7010. So that region itself will be a better price to go for the short opportunity. Alright, and that's pretty much for the New Zealand dollar against the US dollar. Next we have the pound against the US dollar. So back to the 4-hourly chart. Price has been appreciating all the way until it got resisted at the price of 1.5885, or rather there's exhaustion seen at that level because price has already broken above that level itself, which is also the Fibonacci expansion level 141.4%. Expecting price to appreciate further till it touches the final exhaustion level at the price of 1.6072, and there is also a very high possibility the price may appreciate further and break above the final exhaustion level as you appreciate within a rising trend channel. So let's zoom in the smaller time frame itself in the 1-hourly chart. Based on the formation, we're actually seeing a kind of inverse head and shoulder in this case. So we're actually waiting for retracement level to go for a long. If we are taking this level as the neckline of this inverse head and shoulder, then we have already seen price breaking it above it. So you might want to wait for retracement back to the same level to go for a long opportunity. So that's pretty much for the pound against US dollar. Next we have the Aussie against the US dollar. So price has been seen retracing even after it has broken above the 200 moving average and the retracement level of 38.2%. So with the Fed itself, we are expecting price to appreciate further, and the retracement has probably has probably been over and done. So we are waiting for looking for the long opportunity. Right here price is already appreciating. So probably back to the smaller time frame itself. In the 1-hourly charts, we may have to wait for price to appreciate further and retrace for the better price to go for a long instead. So just to have to wait patiently for the better retracement, for the better price to go for a long for the Aussie against US dollar. And next you have the dollar against the Japanese yen. So back to the 4-hourly charts, price was still little change as they still sticks closely to the support level 122.61, and of course being supported at the 200 moving average as well. So we are actually expecting a rebound from that level again. So this could be a good chance to go for a long. You may want to set your stop loss somewhere at the price of 122.25, which you will be suffering about 50, or rather taking a risk of about 50 pips. And on the upside, we are expecting price to appreciate all the way till it touches the falling trend line in this case, and that will be about 100 pips of profit. So the risk to reward ratio is still pretty much acceptable in this case. So That's pretty much for it. And of course, if price were to fall, then we are actually expecting price to fall all the way to the retracement level of 61.8%, the price of 121.28. You might want to consider to plot a falling trend channel in this case. Alright, just in case the price touches this level and starts to break lower, the next level will be at the bottom of the probable falling trend channel. Alright, so that's for the dollar against Japanese yen. And last but not least, we have the dollar against the Swiss franc. So back to the 4-day chart, we are seeing the price has rebounded off from the previously broken falling trend channel. Alright, that has already been happening for a couple of weeks, and right now we are seeing that price has retraced again once more, but this time around we are seeing the price is finally lifting off from this trend line itself, or rather the top of the previously broken falling trend channel. Therefore, expecting price to appreciate further all the way to the resistance level at 0.9239 as the first level, and of course followed by 0.9308, and also at the falling trend line itself as a key take profit level. So that's for the dollar against the Swiss franc. So just to a smaller time frame, you may want to look for an opportunity to go for a long. Probably this could be a good time to go for a long already, or you may want to wait for price to retrace again. Some of the price of 0.9161 would be a better price to go for a long instead. And that's for the dollar against the Swiss franc. And last but not least, I would just like to touch on the Aussie against the Japanese yen. So back to the daily chart itself, we are seeing a very huge inverse in the shoulder that's forming right here, and right now the price is somewhere at the lowest point of the second shoulder itself. Alright, so you may want to wait. You might want to go for a long opportunity right here, but you have to set the stop loss pretty much far away from it, at least about at the price of 94.73. That would be about 80 pips of a stop loss. But of course, at the top, on the upside itself, we're looking at a lot of profit right here. This could be a position trade if you really want to go for it. Alright, if not, if you are looking for a better price, then just have to wait for price to retrace again. Somewhere at the price of 95.16 would be a much better price to go for a long instead. Alright, so that's for the Aussie against the Japanese yen, and with that I've come to the end of today's trading analysis video. So thank you for watching, and I'll see you again.